Well, SABMiller has reported an 11% increase in full-year adjusted earnings per share to 239 US cents. Company saw revenue increase by 10% to $34 billion. Joining us now to unpack those numbers further is James Wilson, Group Financial Director of SABMiller, talking to us from London. Good morning, James. Perhaps just give us a big picture look. Are you in all these continents these days? And where were the star performers? Where were you really pleased with the volumes and indeed the money coming into the company?
Well, good morning. Yes, well, I think we were very pleased across all of our regions. We had very strong performances in terms of growth of revenue across every different division. But clearly Africa performed very strongly with both growth in the continent of Africa and in South Africa itself. And of course, Latin America continues strong growth, which it's been having for some time. So really, we've seen a sort of very much a concerted effort from all divisions. Clearly, Europe and North America are still suffering a little bit more in an economic situation, but we still managed to increase our profitability in both those markets.
Let's take a look at how exactly you're getting that right, James, because when it comes to lager volumes and growth you're seeing in Europe on that front, we've seen a 6% rise. In Latin America, which sits amongst your star performers, it certainly contributes, 32% to group EBITDA. We've only managed to see a 3% rise in lager volumes. So it alludes to the fact that you're getting something more right in Europe, or are we looking at just a low base to start off with?
I think it's a combination of factors. I mean, Latin America has been growing in around about the 3-4% for some time now. I think that's quite healthy. It's consistently increasing its revenue. It's increasing its profit mix in terms of its revenue per hectolitre, and obviously that's flowing down to the bottom line. But yes, Europe bounced back from perhaps a poorer year in the previous year, and therefore we've seen a little bit higher growth there. But I would say that it's pretty much in similar sort of aligns to our performance in Latin America, with effectively just introducing new products into the market, listening to consumers and ensuring we're meeting their demands.
James, the comment has been made. I mean, it's a global company now, truly global, every continent. Lots of the big prey, if you like, have been snapped up by SABMiller. You've brought your way of doing things in, improved revenue, improved margins and so on. The comment has been made that as it happens, with Alan Clark now in charge of the company as chief executive, his focus would have to be on organic growth and improving the margins and generating from within the group as it is, as opposed to growth through acquisition.
Well, I think our performance through the years has been built on both strands of those activities. I mean, organic and inorganic. So we basically have to constantly improve the margins of our existing businesses, and we believe there's still more work to be done in that. But we don't believe that acquisitions are completely finished. There's still activity that can happen in that market. And if you look in the last 12, 16 months, I mean, we acquired the Foster's Group, and then in China you've seen our investment into the Kingway Brewery Group to add to our investments in China. So I think we will continue with the same strategy that we always have of looking at both acquisitions and driving our businesses.
When it comes to driving things on an organic basis, and specifically pertaining to your African operations, you've placed a strong focus on local sourcing, extracting synergies from a combination of your Angolan and Nigerian businesses with Castles as well. So talk us through that strategy that you're employing on the continent.
Well, I think on the continent of Africa, we've been very keen to ensure that we have a complete mix of brands available to consumers. We've been quite keen to ensure that we have products that people who are becoming able to have a little bit more disposable income can enter into the category, such as our cassava or sorghum beers across the continent. We've also got most of our mainstream brands in these different countries. But also we've seen very strong growth at the premium end, with Castle Light performing strongly across the continent. So really it is about offering the consumers a wide portfolio of products and ensuring that they're available and that the price range is acceptable for all consumers.
You mentioned price quite a lot in recent statements and in this results statement, and One gets the impression that there's been a premiumization, certainly in South Africa. Some of the brands were regarded as middle to lower end of the spectrum. It seems to me the only brand in South Africa that's left that's not a premium brand is Carling Black Label. If you look at the labeling and all the premium stuff that goes with premium brands, like the crinkle paper on the bottleneck and so on, clearly that's worked very well.
Well, I mean, I think premiumization is something that one always wants to look at, but it's a case of getting a right mix across your portfolio. You know, we still want beers that people can enter into the category with, particularly in the African continent. But you're right, in South Africa you've seen strong performance from Castle Light, but also Castle and Carling Black Label have performed well in the last year as well. So really it is about ensuring that we are getting the right mix of products into the market, and we're balancing the affordable strategies that we have in places like Africa and Latin America, with also offering the premium consumer the choice of different brands that he can participate in as well.
Especially where in Africa you're having to contend with stiff competition from the traditional beer market as well, that proving to be more cost competitive or cost effective in some ways. Taking a look at the strategy you've employed in Europe though, I mean you've brought through new brand and pack innovations, and that's helped lager volumes grow on that end. So to what extent is that something that you can filter through to Africa as well?
Well, we're always looking at how we grow our volumes in Africa, but if you look at the last year, we've seen strong double-digit growth in a number of our countries. Yes, we had a slight slowdown in Tanzania because of an excise rise last year, but if you look at the continent as a whole, I think the performance was very creditable. And yes, you know, where there's opportunities to introduce new beers, we'll do that. But I think at the moment we're happy with our African portfolio, and the results are demonstrating that. I mean, we've seen strong double-digit profit growth from Africa in the last year. I
want to ask a two-part question, James, here, and the first part relating to South Africa, and secondly to China. Of course, the importance of the South African division in the global group remains. But how important is it now in terms of revenue and volumes? And then the other part of that question is the potential in China. I'm not sure that we in South Africa fully appreciate, although we look at a group like Naspers, which has its 10-cent operation, the potential for growth there is huge. So give us an idea of the importance of South Africa and the potential importance of China.
Well, I mean, South Africa is still a very important part of our portfolio. I mean, it's a very large business. It's performing very strongly. I mean, last year we saw double-digit profit growth from South Africa. Yes, by the time we translate it back on a reported basis, because of the depreciation of the rand, that actually comes back to a small decrease in profit from the group as a whole. But if you look at the business itself, it performed very strongly, and clearly it's a key part of our strategy going forward in one of our key countries. But you're right. I mean, China, simply because of the scale of the consumer base there, has a huge opportunity for the future. And it's clearly beer is continuing to grow there. Per capita consumption is lower than South Africa, and therefore that affords us an opportunity to continue to grow into the future. But that will be a long journey in China as we begin to expand our footprint and as we grow the Snow brand.